Welcome to this section where I will be talking about psychology, psychology in trading. And before I move ahead, you can recall I dropped an introductory video before this one where I was talking about how psychology is the main challenge to profitability. You could also recall I mentioned trading is divided into two segments, the psychology aspect and the technical analysis aspect. And I said the technical aspect is not always the major challenge because it just like 20%, it takes just like 20% of the trading context. Why? Yes, once you have learned market behavior and you have understand market behavior and you already know it, you know it for life. You already have that expertise, you have that skill. But then, how is this skill going to help you make money? That is where the question lies. And that is where psychology play a vital role. And that's why it takes almost 80% of the trading context. If you get it wrong in psychology, you have gotten everything wrong. Why? That is what will determine if you're going to be profitable with the skill you have or stay unprofitable. So before I continue on this particular video, if you have not subscribed to this channel, I urge you to please click on the subscribe button now, like and also share this video because I know there are a lot of struggling traders out there that they don't really have somebody to tell them this thing I'm about to reveal in this video. So sharing this video is going to do a whole lot to get to people a lot, and it also help the YouTube algorithm to push this content to numerous people outside them. So please kindly subscribe, like, share. Also drop me your questions in the comment section. And don't forget to turn on your notification button because what I share on this channel is top notch. You might not get it for free somewhere else. That's the gospel truth. And again, before I forget, this is actually one of my sections, is one of my paid sections in one-on-one trading training. Now, if you are seeing this video, I want you to know that you are getting a premium value because this is actually a paid section. But I want to make it free on this YouTube channel. I want to make it one of the free things on this YouTube channel. So consider yourself lucky for coming across this content. Now let's dive to today's topic, and it's going to be all about how to solve psychology challenge to improve profitability. Now, psychology is what we are going to be discussing. This video is going to be a bit long, but if truly psychology is your challenge, I urge you to be patient, listen carefully, and watch till the end if you are aiming to become profitable. But if you don't have problem with profitability, if you don't really need profitability as a trader, please, at this junction, just exit this video and pass. Don't waste your time. But if profitability has been your challenge, and you really want to work on it, you really want to improve in your trading and become profitable, carry a chair, sit very close to this video and watch to the very end. And make sure at the end of this video you are able to practice everything I have mentioned. It's not about listening or learning, it's about practicing it. Now you are hearing me say it, so I will be needing you to practice them. That's how it's going to work. And I bet you by the time you are done practicing what I'm about to review in this video, you will come back on this channel to drop your testimonial. I look forward to that. Straight to number one point here. I said invest in the right knowledge. Invest in the right knowledge. Now, this is a vital part before we start any other thing. It's just like a plumber. No, just like somebody that wakes up. You are not a plumber, but you want to go and fix a broken pipe in your toilet. How is that possible? You might end up damaging more things because you don't even know anything about it. You just want to do wasabi and you keep damaging things. Now, in trading, it is very, very paramount that you already have that knowledge. Get the right knowledge first. Invest in the right knowledge. And now be sure you already have that skill. Be sure you have it. And now what you'll be thinking about is how to use it and make money. I hope you're getting what I'm saying now. Two things are involved. First of all, do you have that skill before you talk about profitability? You must have the skill. And that's where you invest in the right knowledge. You go to the online course on trading, or somebody taught you, or you have a mentorship who is teaching you one on one, stuff like that. But most importantly, get the right knowledge. Now, once you are with this right knowledge, we already know you have the skill. Now you are looking for how to make it profitable, how to use it and make money. It's just like somebody that studied engineering in the university. Going to school is for you to get the right knowledge, for you to get that skill. And it does not end there. Once you get that skill, when you back that your degree, now you can now start to be looking for jobs. Without that degree, you cannot start looking for jobs. It is first the qualification before the job. The qualification and the qualification and the knowledge you have is what you have as your tool to start looking for white collar jobs. So this is how it goes hand in hand. Get the right knowledge first. Then number two, practice and confirm what you have learned finally on the live chat. As a trader, we deal with chats. If you cannot read what is on the chat, you don't have business trading. You don't have any business coming to trade. That's the gospel truth. Now, once you've gotten the knowledge, you try to practice it on the live chat, just like a doctor. It does not end a learning what an injection is, reading all about cesarean section, laparotomy, heniography, the rest of them. It does not end there. You have to go to the hospital and also practice on a human being. That is when you confirm this thing I've learned theoretically. It is actually true, and I can go ahead and do what? Do it. It's the same thing with trading. We have the theoretical aspect where you learn the basics first. You learn some things first. Then go straight on the live chat and practice them. And as you're practicing it, you are confirming each one that, okay, this is true. They said this is a long position. Okay, if I click on my long position here, and if I place it, it will actually show me a long position. You can see it. Wow, you mark it. Yes, that is true. So that's how to confirm stops on the chat. You have learned it. You are going now to the live chat to practice. So that's the number two. It's a step-by-step thing. You don't rush. Now, number three is start your trading activities only with a well-prepared one-page trade plan. Now, this is the commencement of working on your psychology. A trade plan is very important to. So people just enter market. They feel they already know how to analyze the chart. You just wake up, enter market, and start analyzing. You don't even have a goal. You don't even have the goal of what you want to achieve. You don't even have RR in mind. You don't even know if it is three pairs you want to be trading or five pairs. You just enter market and start doing things randomly. It does not work that way. It doesn't work that way because market is like in fact, the forex market is the largest financial industry. Yes. And it is too large. You cannot do everything inside. You have to be specialized. Know where you are specialized. So that once you wake up as a trader, you already know what you're going to do. You already have your to do. And when you enter the market, you already know exactly what to take and you know when to leave. You're not going there to go and sleep. You're not going there to go and play with the market. If not, market is going to useless you. That's the gospel truth. So you must have a trade plan. What is a trade plan? Now let me show you briefly what a trade plan looks like. Now look at this very carefully. I said trade plan structure sample includes, which means in your trade plan, it contains something. It contains some things you have listed. And I call it your do's and don'ts. That is what you will find in your trade plan. And it will help you have what you are focused on in the market. Now, for example, I said in your trade plan, you can have what pair you will be trading. Example, Euro USD. Now, in this area, I want to talk about trading less. Don't try to trade 20, 30 pairs at a time. It does not make you a professional. It will only keep confusing you because the more you trade, the larger the number of pairs you trade, the more complex it will look. Why? You will not have time to concentrate and get the best of any pair. You will not understand the behavior of that pair. All these things are what you do while investing in knowledge. So it is expected that you choose a few pair at least. Even if you are trading much, 10 is just minimize it within the context of 10. I know setup will not be showing every time on that 10, but at least don't go beyond that if you really want to be trading too much. But then if you want to trade less, at least 3 or 4 or 5 is okay. Why? It will enable you to study the behavior of each one conducively. Example now, I trade gold. I trade gold as a day trader. That's the only thing I trade as a day trader. Gold only. That's where I do my day trading. And then other pairs I have, like 5 JPY pairs, they are where I take my swing trades. You can see how I have minimized the quantity of pairs I trade. Now, if I did not pick one or few, I will not be able to understand that gold is good for me to be able to trade daily. I will not be able to know that it is showing setups for me. But because I have just only gold. I focused on gold alone. I was able to understand the behavior and also know when setups are showing. And that is where I understood it can actually print me about 5 setups in a day as a day trader. So all these things are the importance of trading less. It's able to study the markets better and understand better, become even more professional as a technical analysis. So trading less, what pair you'll be trading should be in your trade plan. When you wake up, you check your trade plan. Okay, let me remind myself today. What I usually trade is Euro USD, GBP USD, and Euro CAD. Anything aside this, consign it. That's trade plan for you. It is your plan. That is what you are using to work. Now, number two, the type of setup, e.g., swing or day trade setup. Now, your trade plan must have what exactly you are trading. Is it a swing trade or you want to be taking a day trade? You must write it down there. You don't just wake up in the market and start going. You go to lower time frame, you go to a higher time frame. You are just confusing yourself. You don't know where to take trade. Please write it down. This is what I want to be trading. Swing or lower time frame setup or the both of them. Write it down. Then number three, your risk size. E.g., I said 1% of your account, like a 1K account risking only 1%, which is $10. Some people here is a big factor in psychology. It starts with what you are risking because psychology comes in when you are losing. You are not able to make anything in the market. That's where psychology sets in. And when we talk about this psychology stuff, we talk about fear, we talk about greed, we talk about overconfidence. These are the three major factors that ruin any trader and can keep you unprofitable for long. That's why you see some traders, they stay long, they are delayed. It is nothing, no, it is because of psychology. But once you pass this phase of psychology, you're already a winner in trading. You have won. And it comes from risk size, a bigger factor. Now, I'm actually working on a new book and I'll be posting it very soon once I publish the book. You're going to understand the importance of risk size, how to manage your risk properly. Now, I always advise 1% of your account. Why? It is just very, very suitable. Even if you have a loss, 1% of your account risk on a single trade will not make you feel bad too much. Yes. Just like I said, for example, a 1K account and you risk $10 on gold. If you lose that $10 on gold, it might not really pain you. Why? The risk was manageable enough. But let me assume somebody risk about $50 or $200 out of 1K. When that person loses that money, you will see emotion will just change. He will just be angry. Everybody around him will just he will just be transferring aggression. That's how bad it can be. And before you know it, the person will start thinking of revenging of trade. That's the origin of revenge. Origin of revenge starts from your greed of wanting to make more. Because now in risk sizing, some people when they want to take a trade, they don't think about what they are losing. Where they are thinking about is how much am I going to make? How much am I going to make? But your mind will not remember, say, you're actually going to risk something before that profit will come. Now, I want you to focus on your risk first. Discuss one on one with your risk and be sure you are comfortable with it. Even though if you lose it, it will not shake you. Then go ahead with that risk. Example is just 1%. The higher your account size, the lower your risk should be. Now, this will help you to be safer, to keep your accounts ready to trade for another day. And this will avoid you blowing of accounts every now and then. And with this, you will not even have any challenge of revenging because there will be no reason to revenge. Because revenge comes from when you lose more than you expected. Then your mind will just be fixed on the market where to enter again and recover. That's where the idea of recovering comes in. And before you know it, you lose the remaining ones that you have. So please, in your trade plan, include it. Your risk must not pass this particular amount. Example, 1% of your account. If you are trading 1K or you are trading $500 accounts. Now, number four is your risk reward. And I said minimum 3 RR for swing and 2 RR for day trades. Now you must write it down. What's the amount of profits I'm looking at making in the market? Let's say, for example, people who go to Alaba International Markets, they go to the market in the morning and they come back in the evening. Okay, oh, can anybody tell me why they are not sleeping in the market? Of course, you and I know the answer. Is because they have to go home and rest. Because they cannot just be sleeping there. They have to go home and rest and prepare for the next day. They simply go to the market when people are coming to go and either buy or to sell. So if you're not buying and you're not selling, you don't have business with the market. And once you are done buying what you are buying, done selling what you are selling, you pick your stuff and go home. It is the same thing in the trading industry, in the trading markets. You must have something in mind. You must have a risk reward in mind. How much are you expecting to collect from the market? And then if you hit that target, you leave. That's why I said example minimum of 3 RR. In your technical analysis, we have profit professionalism. With your technical analysis, you know where to take profits. So once market hits that point, exit. That is how to be professional with your psychology. Simply what? Exit the market. Go and rest. Don't be overjoyed to stay and start looking for another trade. Remember, I said trade less. If you are trading less, you don't have business with overconfidence. Because overconfidence will make you to start looking for another trade. And before you know it, that one might not work and it will now go against you. And then you start panicking. So have a risk reward in mind. Write it down. When you wake up, look into it every day. That should be like your diary. Look into it every day. As a trader, that is your business. Wake up, remind yourself, these are the things I have to do, these are the things I shouldn't do once I enter the market. That way, you are training your psychology, you are disciplining yourself. Discipline is not always sweet, but it will keep you safe and protect you from danger and psychological challenges. You know, trading is mental. It's 80% mental, like I said from the beginning of this video. So when you work with your trade plan, it will ease your psychology, to ease your emotion. You will even get better yourself. There will be no need to panic, no need for fear. No, there will be no room for overconfidence coming to spoil things for you. And you will not even have any reason to be greedy because you have carefully um highlighted things you should do and things you should not do in your trade plan. Now, the last one is emotion style, e.g., not jumping out, no jumping out, booking partials, and allowing trade to hit minimum TP. Now, in your trade plan, make sure you write it down. Your emotion style. Your emotion style simply means what you should not do, what you should not allow yourself to do. Even if it is happening, you will ignore it because it is already in your trade plan. Everything in your trade plan simply interprets as discipline. And don't forget, I said discipline is not meant to be sweet, it's meant to pain you. So once you are looking at your trade plan and it's paining you, just ignore that pain, but allow your trade plan to be for your own good. Oh. Now, emotion style. Your trade plan says no jumping out. No jumping out in the sense that you're already a technical analysis. Once you analyze and you get your setup and you take your trade, on no account should you jump out. On no account should you what jump out until you hit that your 3RR or your 2RR as a day trader. That is what this number 5 is pointing at. Then booking partials. You can tell yourself, okay, oh, once my market has moved, maybe giving me 50%, I can decide to book 50% profits. You can tell yourself like that. So now you will know that when your trade move and it gets to 50%, you can just go to MT5, close half. If you're using zero point 0.2 lot size, you can just close with zero point 0.1. Then the remaining half will run. So it depends on what you want. Write it down. Then I say allowing trade to hit TP. Now your trade plan, you simply tell yourself, on no account should I close my trade when it has not hit TP. Because now you are a professional and you have analyzed properly. You have marked a place where you expect markets to touch. Maybe a very good liquidity pool. And once markets take out that liquidity pool, you are out of the market. Please allow that trade to hit TP. That is called discipline. Set your trade. You already know it is either SL or TP. So everything I explained here is the trade plan. Is a what trade plan. I will take out time and make another video to really explain more deeper on this trade plan structure. But meanwhile, this is just a brief on what trade plan looks like. And if you have this and keep to this, hello, you are going to be the best. In fact, the best, most profitable in the forex market. Yes, quote me right. So now let's go on to the next point here. The next point we have is number 4. Keep to what your trade plan says, even if you are tempted by a good market move. Now, still directing us to the trade plan. I said your trade plan is the engine of your psychology improvement. Like I said, it's not all about writing it down. Stick to it. That is a discipline. Sticking to that trade plan is what is known as discipline. Please stick to what I explain in that trade plan. When you make yours, you stick to it. Obey them. When you wake up in the morning, look at it like a diary. Refresh on it. In fact, you can make it a type of yoga exercise for you. Once you have wake up in the morning, you pray. Prayer is very, very important as well for your psychology to make you to be confident to go ahead. Even when things are looking like it's not working, you still have that strength and energy to keep to your trade plan, to keep going and believing it's gonna be better. And God will help you to keep to that discipline because the truth is, it's not easy to discipline yourself. But by the help of God, by the help of the Holy Spirit, you will be strengthened to do the needful. You will not just be asking yourself question every time, why? Why can't I keep to this thing? Why can't I discipline myself? Sometimes you need help from above. So always pray. When you wake up in the morning, you pray. Then you open your trade plan. You recap reflect on it, like make it one of your yoga exercise, and then dive into the market if you have to analyze. So that's how it is. Then number 5, execute your trade as long as you're the one that did the analysis and you are sure. I already explained this in the trade plan. Once you have analyzed, you have gotten your signals, please go ahead and take that trade. Nothing like fear. You have already gotten the right. That's why I made the right knowledge number one. You've already gotten the right knowledge, which means you already have the skill. Please, once you analyze your market, go ahead and take your trade. Go ahead. On no account should you be analyzing on trade view and be watching it without taking it on MT5 live account. Go ahead and take it. Even if it is $1, go ahead. Look at it, see it, feel it. But follow your trade plan. Follow your risk rule. Follow your TP rules. Take your trade. It is either SL or TP. Most time when you analyze and you know your setup is good, even if it hit loss, it doesn't mean you are wrong. It is just market. Market remains the boss. But when you analyze and you are sure this is the setup, go ahead and what? Take your trade. No fear. As long as you are working with your trade plan, there is no reason to fear. Then number six, risk no bigger than 1% of your account balance on a single trade. I've already spoken about this also in the trade plan. Your risk is important. Do not risk what you cannot be able to swallow if loss happen. Think of it like I want to take GBP card. I am risking $20. I will ask myself, okay, then if I lose this $20, will I be happy? Will I still be able to trade tomorrow? Will it shake my account equity? If the answer is no, then go ahead and risk that amount. But if you ask yourself, hey, if I raise this $20, I go fit chop tomorrow. My balance go still dey. If your answer is, in fact, if you are delaying in answering yourself, it is totally yes. It will affect you. So cancel that risk. And to avoid stress on how much should I risk, how much blah blah blah, use 1% of your words account balance. 1% of your words account balance. That way you don't really have anything to be stressing on too much. Now the last one I said stick to everything mentioned above or stay away from the trading industry. It's as simple as that. If you cannot keep to all these things I have said in this video, all these things I have mentioned in this video, please and please stay away from the forest market. It is not for you. Forex is not what everybody can do. It is not for everybody. It is for the disciplined personality. It is for the disciplined personality. If you cannot swallow discipline, trading is not for you, or else your mental health is at stake. I don't want to cause that to your health. Please, if you cannot stick to all I have explained here to improve your psychology and help you become profitable in the market, please stay away from the trading industry. And once again, I want to let you know that fear, greed, overconfidence, they are normal nature stuff. Yeah, it is in everybody naturally. Though they are negative auras, they are also defense mechanisms. But when it comes to the context of trading, they are 100% negative because they can affect your trading activities and take away profitability from you. So, if you keep to all I've explained in this video, I think nothing should stop you from becoming profitable henceforth. So, I look forward to your testimonials right back on this channel. And that would be the end of this video on how to solve a psychology challenge like fear, greed, revenge, overconfidence. This is how to solve them to improve profitability in your trading. Whether you're a crypto trader, you're a forex trader, a binary trader, trading in general. If you keep to what I've explained here, they are mostly general. But if you keep to them, hello, you're going to be profitable. In fact, in in a way that you, in fact, beyond your wildest dreams, you'll be asking yourself, is it me that did this? So that's how powerful it can be. And this will be all about this video. Once again, if you've not subscribed to my channel, kindly subscribe. And if you want me to take you on forest tutorials, maybe you're a beginner, you're still starting, you're still struggling, maybe with technical analysis, and you'll be needing help, I offer 101 6 weeks virtual training classes. If this will be interesting you, you can make use of the contact link in my bio to reach me on WhatsApp. only. Do not forget to subscribe to this video, like, share, and comment me your questions in the comment section. If you are shy and you don't want to talk here, you can as well use the contact button in my bio. Thank you for watching this video to the end. I hope you got value. Don't forget to visit again. Don't forget to watch other videos on my channel. You really get great value. Bye for now. See you in my next video.